Howdy, everybody. Welcome to Liberty Call. Today is, what day is this? Thursday, November 7th, 2024. Hope you're having a fantastical day out there. I think it's Thursday. Let me check. Today is, Thursday. Whew. Anyways, it's been a long week. A lot of snow. I had to just clear several 100 pounds of snow off my driveway, and it was a lot of fun. So anyways, hope you're having a great day out there. And before we jump into today's numbers, if you, yes, you could do me a favor, give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All right, let's hop into today's markets. Dow Jones was flat, closed right at zero at 43,729. S&P 500 was up 0.74%, 44 points, closed at 5973. NASDAQ up 1.51% today, closed or 285 points, closed at 19,269. The VIX fell 6.58% today. It's at 15.2. Canada up 0.85, Brazil down 0.38, and Mexico up 1.22. In Europe, Germany was up 1.72%, the UK down 0.32%, France up 0.76%, Netherlands up 0.36%, Spain up 0.65%, Italy up 0.12%, Switzerland up 0.77%, and Portugal up 0.23%. Russian exchange is both green today. The MOEX up 1.02%, RTSI up 1.18%. And the overnights, the Nikkei in Japan was down 0.09%, Australia up a third, New Zealand appears to have not been open. The Shanghai in China was up 2.57%. Shenzhen Component up 2.44%. China A50 up 3.43%. DJ Shanghai up 2.63%. Hang Seng up 2.02%. And the Taiwan weighted up 0.82%. All right, pretty good day across the Chinese markets. Wonder why they were in such a good mood. All right, well, let's hop into the market recap. S&P 500 climbs after hitting fresh record high as Fed cuts rates again. Woo! Way to go, Federal Reserve. You know, we need cheaper credit. All right, the S&P 500 reached a new record high on Thursday, building on the previous day's significant gains as the Federal Reserve delivered a widely anticipated 25 basis point rate cut, reducing its benchmark rate to 4.5 to 4.75. This adjustment followed the 50 basis point cut in September, with the Fed noting progress on inflation while acknowledging it remains above the target. The move signaled a cautious approach to monetary easing amid mixed economic data. In corporate news, several companies posted strong earnings and positive updates. Moderna reported a surprise profit for the third quarter, driven by higher than expected COVID-19 vaccine sales. Who is getting COVID vaccines at this point in their life, or in the world? I mean, they didn't do anything. I mean, anyways, although it forecasts lower vaccine sales for 2024. Warner Brothers Discovery also surprised with a profit despite revenue falling short, attributing the shortfall to fewer blockbuster movie releases. Lyft shares soared by 24%, following better than expected sales, optimistic guidance, and an announcement of a partner for self-driving cars. Analysts pointed to Lyft's strategic focus on enhancing customer experience, product innovation, and pricing as key drivers of growth in active rider engagement. Qualcomm stock initially rose after beating earnings expectations and announced a $15 billion stock buyback. However, it later paired gains. ARM Holdings also reported strong results, boosting its stock by over 4%. After-hours reports were expected from other prominent companies like Block, Pinterest, and Rivian Automotive, with investors closely watching for additional signs of strength in technology and consumer sectors. The Fed rate cut, along with solid earnings, helped fuel market optimism, positioning equities for further potential gains in the short term. Yeah, yesterday was weird. The equity markets just went through the roof after the election, and you might call your safety assets, your gold, silver, your commodities, things like that, plummeted yesterday, like 2 or 3%. Today they made that most of that back up. But the thing that I commented on was at the time was nothing's changed. We still have the same problems that we had last week, last month. So just because the president is different doesn't mean that we don't still have all the same financial problems out there. So let's see. My stream is not showing up in save changes. Anyways, Oh, well, we'll keep going. All righty. Well, let's jump over to the next bit of data I have here on the docket. This comes from First Trust Q3 Productivity, the preliminary report. This comes to us via Strider Elas, senior economist there. So let's see what they had to say. Federal Reserve is anticipated to reduce rates by 25 basis points today, which they did, but recent data on U.S. worker productivity and labor costs suggests lingering inflation risks if the Fed pursues overly aggressive rate cuts in the future. In the third quarter, non-farm productivity grew at an annualized rate of 2.2%, slightly below expectations as output increased at a faster rate than hours worked, boosting output per hour. This brings annual productivity growth to 2%, the lowest since early 2023. However, unit labor costs, a key inflation indicator, rose at an annualized pace of 1.9% in Q3 with a revised Q2 increase of 2.4%, showing that labor costs are growing faster than anticipated. Over the past year, labor costs have risen by 3.4%, surpassing the prior year's increase of 1.2%. Despite inflation, workers' real compensation per hour grew at a 3% annualized rate in Q3 and is up 2.8% annually, indicating some gains in purchasing power. Manufacturing productivity rose modestly at 1% annualized rate in Q3 as both output and hours declined, but hours fell at a faster pace. However, annual growth in manufacturing productivity remains low, rising only 0.7% over the past year and declining 0.2% the year before, suggesting government subsidies in the sector may hinder long-term productivity improvements. On the labor front, initial jobless claims rose slightly by 3,000 to 221,000, while continuing claims increased by 39,000 to 1.892 million. These figures suggest job growth is ongoing, but at a slower pace than earlier in the year, reflecting potential challenges ahead for the labor market. All right. And one more article. This one has to do with the Fed. Federal Reserve cuts its interest rate again. Yes, we've already talked about it, but it is the news of the day. So we'll dedicate a full article to it. All right, let's get to this. Federal Reserve cut its benchmark interest rate by 0.25 percentage points on Thursday, lowering it to a range of 4.5 to 4.75, marking the second consecutive rate cut in an effort to support economic growth and curb a slowdown in the labor market. Again, let's pause here. All year long, the people out of Washington, Sideshow Bob, the White House spokesperson, was telling us Bidenomics is working and this is the greatest economy ever. Ignore the fact that we just had an election this week that, people want to go in another direction, but everyone was saying everything was fine. People on TV, but also in another breath, were telling us we had to lower interest rates because, the economy could use a boost. Which is it? Anyways. All righty, where are we here? Fed Chair Jerome Powell emphasized that the bank's strategy is flexible and will be determined by economic data, stating they are not, quote, or are, quote, not on any preset course, end quote. Another rate cut could occur at the December meeting, which is on the 17th and 18th of December, but the Fed has not commented on it, choosing instead a cautious, data-driven approach. Yes, they're very data-driven. The Fed move seeks to strike a balance between stimulating the economy and avoiding a resurgence of inflation by making borrowing more affordable across various types of credit, including mortgages and auto loans. Interest rates on longer-term loans like mortgages, however, have remained elevated, driven by investor concerns about potential inflation from President-elect Donald Trump's economic policies, which could include tax cuts, increased spending. Yeah, because there was no reckless spending if the Democrats had won. None, zero. Powell responded that the Fed would adapt its approach based on actual policy changes from the incoming administration rather than campaign promises. Despite his reappointment under Biden, Powell firmly stated he would not step down if Trump were to request his resignation, reinforcing his commitment to the Fed's independence and long-term mandate to promote maximum employment and price stability. Yep, yeah. Now Chairman Powell has got a set of cojones on him, so anyways. All right. Well, that's everything I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a ring. I'd be happy to help. All right. Well, hope everyone has a wonderful evening. If you're in the Colorado area, hopefully you can dig out from wherever you live and make it to, the road. But yeah, it's been pretty bad here. So anyways, all right. Well, hope everyone has a great night and I'll talk to all y'all again next time. Adios.